All right. Very good afternoon, students. Today we are going to talk about something very, very meaningful, important from your understanding perspective with respect to subsequent accounting procedures which we are going to follow. So this is the seventh chapter. We call it as Origin of Transaction, Source Document and Preparation of Vouchers. You may have heard of the term vouchers many a times, but it's an understanding with respect to the principle of accounting. We will understand it today. So the learning objective of this particular chapter is going to be a source document. You will understand what is source document, meaning of vouchers, type of vouchers, source vouchers or supporting vouchers, what are they, accounting vouchers, preparation of voucher. So these are the understanding which you are going to have it today. In order to make you understand further, I'll give you a premise so that you will be able to understand it thoroughly. Let us see what is that. Let's say an organization by name ORG. This is an organization which does a business, maybe a stationery business. Now this businessman, there are some staff, there are certain departments in the organization. It's a big stationery firm, so it has staff. Maybe there are sales staff or sales department, there is human resource department, there is also marketing department which is engaged in promotion, operation department, and there is an accounts department. All right, so which is very likely in a bigger scale firm you happen to see these departments prevail there, or there may be some more departments as well. Now in this particular organization or a firm, lot many day-to-day transactions, business transactions happen. Now what are these business transactions? So we have sales department, they are into selling the product in the market. So these sales department, they often go to the market, they also claim certain advances in terms of money in order to meet the day-to-day expenses. They do selling, there may be cash sales or there may be credit sales. There is operation department which also happens to incur expenditure in terms of wages paid or organizing certain events or day-to-day activities. HR department also engages itself in training the department, training the employees and related aspects which are there. Then we have marketing department which also does certain important activities which is branding, promotion. Now why I am referring to these is because of the fact that when there are these activities involve payment and receipt. Either they are paying something or they are receiving some. All right. So if there is payment done or receiving done, which is a transaction. Now these transactions, if there are so many activities happening in a day and there is a payment going out or receipts coming in the business, this in order to manage this payment and receipt, the accounts department needs to follow an structured procedure. Then only it is able to take up everything associated related in terms of payments and receipts in an effective way. The processes or documents are to be important, basis which the subsequent transaction entries can be made in the books of account. Now the question is that whatever we have studied so far and whatever we are going to study further, these are essentials which are required to be done in order to do accounting effectively, purposefully, and it meets the objective of external and internal users. Now how to make this practice effectively? There are processes to be followed, and what are they one of the most important process is the vouchering or document. So there are documents because we know that entries can only be made in the books of account basis the evidences. Unless the evidences are established, entries cannot be made. So it is very important to understand this, that the evidences are important and the documents which are submitted along with the details of the transactions which stands as evidence for the transaction. Now what are these evidences, there is one source document, we call it, basis which the entries are made. Let us understand what are these source documents. An evidence of a transaction or an event may be cash memo. So whenever, let's say, an enterprise ABC firm sends its employee to buy something from the market, let's say stationery from the market. Now this stationery shop, after having bought certain stationery item, cash is paid by the employee to the stationery shop owner. Now in turn, stationery shop owner hands over a cash memo which has certain details of cash memo number, he puts in date, then there are serial number or and the item correspondingly the items are written there. Then comes which all items he has bought, here everything is written, the count, then the rate and the total amount, and against which how much of cash. If supposingly this is 1000 rupees, so there is a cash rupees 1000 received, and this is made in terms of cash or maybe even check as well. So whatever it is, accordingly it is required to be mentioned, and there is a signature of the seller, and this is the firm to whom it has been sold is written here, and then this stands as a proof for the accountant of this stationery shop ABC firm to enter subsequently in the books of account after having verified the cash memo. The cash memo is the document which is given by the seller to the buyer stating the cash which he has received against the sales and the description of the sales quantity and other details mentioned there. The accountant of or the firm enters in the books of account, or the accountant enters in the books of account on behalf of the firm. This is understood. Cash memo, which is given by the seller to the buyer, and payment is made in cash or check. Invoice. Now, if there is a credit sale, it is not only cash sale that happens in an organization, there are credit sales as well. So if there are credit sales done along with the selling, supposingly 10 books are sold by ABC firm to, let's say, XYZ organization. Now 10 books which are sold. Now this is books, these are books. So books sold on credit as per the agreed term, the payment will be made by the XYZ to the seller. So let's say till then, he along with the books, he sends the invoices. Okay, invoice. Now these two are sent to XYZ firm, and basis which the invoice, which is seller who submits it to the buyer, the recordings are made in the books of account. So in the buyer's book, the basis, the invoice, he will enter, the accountant will enter in the books of account. Now how is this the format of an invoice? So this is the name of the firm, the supplier, then to whom it is sold, the buyer's name is mentioned there, address is mentioned, what all books which have been sold at what price per unit, and the total amount which is to be paid. There is CGST and state GST. This we will study in the subsequent chapter, which is also taxation is also added to it, and this is the amount which is to be paid. So this is the invoice which has been raised by the seller to the buyer. Buyer's book will enter basis this invoice which is shared, and accordingly there is a transaction which has happened and records are maintained. I hope this is clear. Now, so we have understood cash memo, we have understood invoices. Now let's say receipt. Now, when receipts are issued, so when cash or check is received from a customer, a receipt of for the amount received is issued. So when a cash is received, there is a receipt. Supposingly, if we have sold goods to XYZ, after some time or as per the agreed term, he has paid us the cash or check. For the payment which is made by the buyer on a later date, on that particular day on which the payment is being received, the accountant enters in the books of account, after having issued a receipt for the payment which he has received. When cash or check is received from a customer, a receipt for that amount is issued so that it becomes a proof of transaction, and subsequent entries are made in the books of account. I hope this is clear. Now let us see what are details which are there in the receipt. So received with thanks from Rahul Sharma, sum of rupees this much, amount in words as well. It's a normal practice of entering the amount as well. Purchase of what items that we have purchased, whether it is cash. If it is cash, then fine. If it is check, then write the details of the check number, and then accordingly it is signed and then given to the person who is making the payment, or the buyer who has bought on credit, now paying the making the payment. I hope this is clear. Now, pay in slip. You must have visited bank. So there is a customer who visits a bank. Now there is a bank. Now whenever the transaction happens between a customer and a bank, there are, you must have seen on the counters of a bank lot many slips which are kept there for any particular transaction which you are likely to make with the bank. A corresponding slip is required to be filled as per the norms, and then the transaction can take place, so executed. So this is important. So when you are paying in, depositing money, cash or check in the bank, then that particular slip, there is a specific slip, what we call it as paying slip, which is required to be filled as per the format mentioned there, and then it is submitted along with the cash or check in order to get the credit done. Usually, if it is check, it is dropped in the drop box. If it is cash, it is deposited directly to the account. So how is the format of a pay-in slip? Let's see. So this is cash or check. There is an amount. If it is cash amount, then there is a slight difference pay-in slip format you may find, because there will be the denominations mentioned as well there. So 100 rupees, if at all it is cash, how many 100 rupees note, how many 500 rupees notes. So all these details are also elaboratively written there, but just for understanding sake, I have picked up this for you to understand. So there will be check number, bank on which it is drawn, branch, amount, how much of amount. Then there are account number, account holder's name, if it is a check, to whose name it requires to be credited, that is also mentioned there. And there will be a stamp which will cover this two parts. So what will happen? Half part will reflect here, another half will reflect here, which appears as a counterfoil, as a proof that the amount or check that has been submitted in the bank as per the pay-in slip with the details mentioned there, so that in case there is some discrepancy subsequently, then this can be referred as a proof, as an evidence that deposit has been made, and there is required to be a corresponding credit in the books of accounts. I hope this is understood. Pay in slip. Now let's say a check. So many of you may have seen what a check looks like. So there is a check, ABC Bank. Now, just an a specimen. So we write here date on which you are drawing the check, writing a check, to whose name. Let's say it is to be given to ABC Stationery Shop owner. So the firm's name is to be exactly written. So there is ABC firm name. Then there will be rupees. If it is 10,000 rupees, so you write in word 10,000. Then there is amount as well. So there has to be written the amount. Then rupees 10,000. Then let's say this is to be cut. ABC company. Then this is also cut. All right. And then there is account number. So when you are paying somebody a check, so this company, there are two ways to do. One is this, without any crossing of the check, it is called as bearer check. So the person to whose name the check is drawn can go to the bank and withdraw money. That is one way. If you have crossed it, it will only be credited to his account. So this is called crossing of the check, drawing two lines on the upper side of the check, or account payable, that can also be written, which means it is only payable to the account in whose name the check is drawn. I hope this is clear. So, and the drawer's signature is also written here. So this is how check which is issued, and this is the specimen of a check. This happens to be the number of the check number. So for any future reference, this can be used. I hope it is clear. Now there is a debit note. Now what is debit note? You must have heard of the term called debit note and credit note. Now debit note is nothing but a debit has been raised in whose name the note is created. What does it mean? Let's say there is a buyer and there is a seller. Now buyer who has bought a certain item from the seller. So seller has sold to buyer. Okay. Now, supposingly, if there were say 10 books which were to be sold to the buyers. 10 books. Now, out of these 10 books, 8 books reached safely to the buyer's place, but 2 of them were damaged, or maybe they were somehow damped because of water or rain, whatsoever be the reason, they were not in a position to resell. So he informs the seller that 2 books were not packed properly, resultantly they are damaged, and the price of these 2 books, let's say 200 rupees. So, how to adjust this? When there is a purchase done by the buyer from the seller, so he credits seller, right? As per the rule of accountancy, right? Debit and credit rule. He credits the seller because there is increase in liability. And since it is on credit basis, so the supplier's account is required to be credited. So he credits the seller, right? Now, since 200 rupees out of the total amount for which the buyer is claiming that this 2 books were not as per the specification or were not in proper condition for resale, therefore 200 rupees is required to be debited. So the buyer issues a debit note to the supplier mentioning that such and such books are damaged or not resellable. Therefore, this much amount of debit is made in the books of account of the buyer so that the necessary adjustments are also made in the books of supplier. So therefore, the credit amount to the extent of debit note issued gets reduced, and the liability of the buyer to pay the supplier is by the reduced amount, not the whole amount. Say if it was 10,000 rupees of books which was bought, out of which 200 rupees of debit note which is issued by the buyer to the seller. So finally the amount to be paid is 9,800, not the whole 10,000, because 200 rupees of debit note has been issued by the buyer to the seller. I hope this is understood. And how is now the debit note appears here? So it has details of the particulars mentioned: quantity, rate, amount, how much of debit note, how many books, how many number of books which are not in good condition, and every details which are written here, signed and sent to the seller, so that the seller also does the entry accordingly in his books of account. I hope this is clear. So this is a debit. Now comes the credit note. Just reverses the condition. Supposingly we are the buyer and there is a seller. Okay, so we have bought goods from seller worth rupees 1,000. Okay, but seller has raised an invoice of rupees only, let's say 100. Okay, so 100 rupees of invoice by mistake is raised against the buyer. So buyer came to know that only 100 rupees of invoice is raised. So what he is, that means there is a difference of 900 rupees. So, or we can reverse it this way. This is the buyer and this is the seller. So the seller notices that only 100 rupees of invoice that has been raised against the buyer. So he will, I'll make you understand with a different example so that you can understand it further. So what happens that the buyer and seller, there are two people involved here. So one is buyer and the other one is seller. Okay, now the buyer has bought certain goods from the seller. Okay, so the seller has supplied goods to buyer. Now the buyer on receipt, the seller on sales, after having sales is executed, seller came to know that the buyer has only been issued or given against the 10 books, only 9 books have been supplied by the seller to the buyer, but the payment is already received of rupees of 10 books. That means 9 books for which the payment is received by the seller, 10 books for which the payment is received by the seller, against which only 9 books are supplied. The seller comes to know of it later. So there are two options: either he supplies one more book to the buyer, or if it is not possible, then buyer or it is not mutually agreed upon, in that case buyer, what it will do, it will ask for a credit note from the supplier. So supplier issues a credit note to the buyer, making a mention that one book for which the payment has been received or a debit has been made is required to be credited. So one book value is credited in the books of seller's account, and buyer accordingly enters in his book. So there is a credit note, means this much of credit is given to the buyer, which is issued by the supplier to the buyer. So this indicates that the credit to that extent has been given in the books of account. For selling or for dispatching, instead of 10 books, only 9 books have been dispatched. All right. So this is a credit note which is issued. Now comes the vouchers. Now vouchers, what are these vouchers? They are prepared from the source document. What are the source document? The original document for a particular transaction. There are so many documents which we have seen, be it debit note, credit note, or there is a cash memo which is received by the seller to the buyer. So all these are original document, source document, basis which another internal document is prepared, and that is called voucher. So a document evidencing a business transaction, such evidences are source document. And when vouchers basis that a document evidencing a business transaction, such evidences are source documents. Now let us see what are these. Vouchers may be categorized into source voucher or accounting voucher. So we have already seen the source voucher, source documents. Now we will understand what are these source vouchers and accounting vouchers, and how these are entered in the books of account. Let us see. Now, what are the features of source vouchers? It is a written document. Now, this is first important thing. Source vouchers are written documents. It contains complete details of transaction. We have seen that. Proof of transaction, because if there is a transaction that has taken place, there is a corresponding evidence in the form of documents or vouchers which are submitted. Then it is generally for a business transaction. It is signed by the maker. So these are few essentials. Now, what are accounting vouchers? So accounting vouchers are the subsequent level of work which is done by the accountant after having received the source vouchers. He prepares the accounting voucher, which is for the internal use. So an accountant has a source voucher, yet before recording in the books of account, these are analyzed, determine which account are to be debited and which is to be credited. So if there is a cash memo received, so basis that what are the informations that are available in the cash memo, how much of cash is paid, how much of cash, and secondly what items bought. So which account is to be debited, which account is to be credited, ultimately is done by the accountant, but he does not do it basis the only the cash memo. He prepares an internal voucher which is called as accounting voucher, and then subsequently enters in the books of account. There are certain important points to be paid attention to while preparing accounting voucher. So yet before recording in the books of account, these are analyzed and determined which is to be debited, which is to be credited. The decision is recorded in the document termed as accounting voucher. Let us see now the features. It is a written document, so we have understood that. Prepared on the basis of evidence of the transaction. It is analyzed in the sense that what is to be debited, what is to be credited. It is prepared and signed usually by an accountant, then countersigned by the authorized signatory. Now this is important. Senior accountant or manager alongside basis the accounting voucher which is prepared by the accountant, there is a specimen for signature of the authorized signatory or the manager. So he also signs it, which to an extent certifies that yes, this much of transaction that has happened and subsequent finances transaction related to finances can take place, or payment or receipt can accordingly take place. Let us see the accounting voucher. So this is cash voucher. So there are two types. One is cash, another one is non-cash or transfer voucher. Now what is cash voucher and what is non-cash voucher or transfer voucher? So this is only used for cash transaction, and this is record, and this is for credit transaction. All right. So this is the difference. Credit transaction for which this is required. I will make a mention here. All right. Let us see. Now, what are cash vouchers? It is prepared at the time when receipt or payment of cash and includes receipt and payment through check. So both cash as well as check, both are paid attention. When there is at the time of receiving or making the payment of cash, we have to make an entry or cash voucher is prepared. Now let us see the types of cash voucher: credit voucher and debit voucher. What are credit vouchers and what are debit vouchers? Now, when it comes to credit vouchers, these are prepared when cash is received. Now, this has to be paid attention. Credit voucher is prepared when cash is received, indicating that the amount or the account which is required to be credited. So cash means cash is received, so there is already a debit which is to be done to cash, but which account is to be credited, that is mentioned there. So maybe sale of goods. So when we are doing sales, cash is received. If it is cash sales, so cash is debited and sales is credited. Sale of fixed assets, sale of investment, or in all these places we are receiving cash, or withdrawal from bank is also cash is received in the branch. So these are credit vouchers are prepared as a record for cash received. Now coming to the format of a credit voucher for cash received. So let us say, as I said, it is a credit voucher. Cash is not mentioned there. Which account is to be credited is mentioned. Against what we have received the cash is what entered in the cash in the credit voucher. So sales account is credited for sales done, and this is the amount. Goods sold for cash by bill number this much. So this is 20,000 rupees, and this is the signature of a senior person, senior accountant. I mean, sorry, this is the manager signature, and this is accountant signature. So this is the credit voucher specimen, which indicates that this is how the credit voucher is prepared and under what circumstances it is prepared. Whenever there is sales done or cash is received for sales or any related thing, then there is a credit voucher prepared. Now debit voucher, when payment is made, payment may be made against expenses, wages paid, or maybe certain items which are day-to-day expenses are made, for which payment is made. So expenses, purchase of goods, maybe fixed assets purchase, for whatsoever reason, there is a payment made, deposit in the bank, payment is going out or cash is going out from the firm to the bank, drawing. So all these cash is going out, and therefore there is a debit voucher is prepared. So which account is, when cash is going out, we need to credit cash. So which account is to be debited for which the cash has gone out is to be mentioned in the debit voucher. So credit voucher, wherein we have already seen similarly, for the debit voucher, when we are making the payment, when payment is made in cash, a debit voucher, and when payment is received in cash, which happens to be the accounting voucher. Now let us see how the debit voucher is prepared. So we have this purchases debit to cash. So there, when we are making the payment or there is a payment may be made against certain things, so we are preparing a debit voucher. This is the format wherein amount for what purpose the payment is made. So this is for purchases and signed by the senior accountant and the account. Non-cash voucher. So there we have seen for cash transaction, cash voucher or credit voucher or debit voucher is prepared. Non-cash transaction, there is a non-cash voucher or transfer voucher is prepared. These are vouchers prepared for transactions not involving cash. For example, invoice, bills, debit, credit note. Non-cash vouchers are prepared for the transactions of credit sales, credit purchases, credit goods return, both involving inward, outward, rectifying the errors, etc. So these are prepared when cash is not involved and the transaction has taken place. Now let us see the format of a voucher here. So there is a debit and there is a credit. So this is a non-cash transaction wherein both debit and credit is mentioned here. So when we are making the payment, non-cash voucher or transfer vouchers are prepared not involving cash. So there is this is not cash here. It is, let's say, we have to make a mention of the account name of the firm. So ABC stationery. Instead of cash, it has to be ABC stationery. So I hope this is clear. So because it is a non-cash voucher, so cash is not entered here. So debit is stationery and credit ABC stationery account. Now compound voucher. Vouchers which records a transaction that entails multiple debits. So there are so many debits which are to be done, which are done, and one credit. So debit vouchers that records a transaction that entails multiple debits or multiple credits. We say one credit or debit is called compound voucher. So there are multiple debits and multiple credits. Multiple debit, one credit, and multiple credit and one debit. So compound vouchers may be debit voucher or credit voucher. So multiple debits but one credit is called debit voucher. Multiple debits but one credit is a debit. More debit, so debit voucher. More credit, so credit voucher. So multiple credit but one debit is called credit voucher. So more debit are done and one credit is done, so it is a debit voucher. More credits are done, one debit is done, it is a credit voucher. Now preparation of voucher. So this is how we prepare. We have already seen. So a specimen of a voucher, so stationery bought, and if it is bought on credit, so there will be ABC firm name or supplier's name is to be written here. So we have this voucher. Debit is stationery and credit ABC firm. So we have and we prepare voucher, or if it is a cash then we will make a mention of cash. So this is how this is entered in the books of accounts. So vouchers are accordingly prepared. So I hope this particular understanding which is related to vouchers, though this becomes in the day-to-day life or in a firm practices, these terms are frequently used. So if you have from examination perspective, it is important to understand each of these terms. When to you, what does it mean? Be it pay in slip, credit note, debit note, voucher, credit voucher, debit voucher, accounting vouchers, transfer voucher, source voucher. These terms because are frequently used in subsequent processes of account maintenance of books of account. So I hope from this particular explanation you may have now some understanding, but more of learning and practicing and visualizing things can help you understand furthermore better. So that, and I would expect you to do that so that subsequent pages, subsequent chapters, you will be able to understand them. All right. So thank you so very much for today, and whatever we discussed today I hope is understood by you. You will, in case there is anything, you can touch back to the video, go back and check a particular document, particular voucher for which you require an understanding. There is an explanation and a write-up given. You can refer that, and once again you can through that understand it furthermore better. So thank you for being in. It was wonderful talking to you all, and we will come up with the next chapter, which is journal entry after this. So thank you for now.